Good afternoon, everyone. We are back again. This is Sam with NATP. I am joined today again by Eric Green. Eric is with Tax Rep Network, as well as you're affiliated with a few other projects and jobs.
Well, the law firm. Yeah, I mean, my day job, right? Green and Sklar's, but
yeah. So, that whole thing. Just to recap for everyone who is joining us, we are live today to talk about representation and everything and anything related to that. We have some questions that we need to go through. But for anyone who's listening or watching this right now and you didn't submit a question yet, we can take them on air live. Eric has agreed to do that. So please feel free to submit your questions in the comments as things come up. We would be happy to take them. But to start out, Eric, welcome. And it is now January, what is it, the 18th today? Yep. Holy cow. So individual returns are starting to be accepted next week. Business returns are already accepted. You guys are just going like wildfire, it sounds like, over there.
We don't do tax returns. So that's but no, the government enforcement is up. Trust fund assessments are now coming out. I spent even though Monday was a holiday, it was the only day I could book. I actually had 8 new client consults on Monday. Enforcement is definitely up. We're seeing the uptick.
Well, and you've said in the past, January 3rd, that it was announced that it was going to be gangbusters. The IRS was going to start going after the past due amounts, correct?
Yeah, well, and the trust fund assessments, they began on the automated enforcement on the levies during the summer. Okay. So we saw that in the fall, but they've been holding off on the payroll taxes, but January 3rd, all bets were off and we're starting to see it. So, tough for the employers that are behind in payroll taxes, good for us who do this for a living.
Right. So, exactly. You got to do what you got to do. So recap, again, we are talking about representation. Eric, you are an expert in the field. You have been doing this work for a very long time. Totally off the cuff question, but what is it that you like about doing this kind of work?
Well, one is every case is a little bit different. They're interesting. There's strategy to it. So I find it. I find the cases interesting, and frankly, so few people do this. And the people that need help really need help. We charge a pretty penny for this. I mean, it's a very lucrative practice area.
Mm-hmm. So definitely something to consider if this season really drives you over the edge with preparing returns. Definitely something to consider. So I stated before we had some questions submitted. So I think we'll just dive right into that if you're okay with that.
That's fine.
First question from Bob. What is the status of superseded tax returns that were filed 5/17/21 by pre-April 2021 joint filers? He goes on to say these taxpayers have filed married filing separately, superseded tax returns on May 17th, 21, after initially filing jointly in February and March in order to take advantage of the unemployment exclusion for MFS AGIs that were less than $150,000.
Okay, well, there are a couple problems. One, so two different things we're talking about. These would be qualified amended returns, theoretically, but they aren't. But I'll get into that in a moment. A superseded return is where you file the amended return before the due date. So in other words, they're due April 15th. We file the original return February, catch the mistake, file the amended return before April 15th. These came in May. I'm splitting hairs here, but the real issue here is they're not going to be accepted. And the reason is if I caught the fact pattern right, they filed joint and then amended to go separate. You can't. Once you file a joint return, you're stuck with the joint. You've made the election. You're now stuck with joint. You cannot file joint and amend to go separate. If you file separate, you can then later amend to go joint, but it doesn't work the other way. So my expectation is that the superseded or qualified amended returns that tried to go separate, the other spouse can get innocent spouse relief, which is an uphill battle.
Interesting. Okay. Next question from Tina. We have two. First part of it, how do you set client expectations on timeframes, especially she mentions she's newer to representation and doesn't really know the timeframes herself. What advice do you have?
Well, in a way, Tina's going to get kind of off the hook because the IRS is so screwed up and so backed up that even if I sat here and walked you through the timeframes, none of them apply anymore because the government is just all over the place. So it really depends kind of on what you're doing. I am telling clients, under the best of circumstances, if you submit a written package, at best, 4 months, you might hear something. The one exception is the offer unit. The offer unit does seem to be working things as timely as ever. And again, even there, it's 2 to 3 months, but that's always been that way. By the time they open the package, get it into the system, do a quick review, you're usually 8 to 12 weeks out. That seems to be consistent. But the normal collections where you would send in and within a month you'd get some turnaround, it's really more, at least for now, 3 to 4 months at least. So that what I would do is I would say, look, the IRS right now is understaffed. They're pulling away staffing to work the phones and work 1040s. So I would tell clients, we can't really even call the follow-up for at least 3 to 4 months. So I would just sit on your hands, expect 4 months. If we don't hear by then, I can get on the phone and call and see. But honestly, what they'll most likely say is it's sitting in a pile somewhere. No one's worked it yet. So I think the default right now is you're safe saying 3 to 4 months. If we hear earlier, great. But we don't want to start calling until at least then.
Got it. And then second part of her question, can you address what it means and looks like to go to appeals? Tina says, I'm not an attorney and appeals freaks me out a little bit.
No, actually, I understand that because, and even people who are attorneys that don't do this work, they think of appeals like the appeals court. That's not what it is. If you could physically go in, which you can't now because of COVID, but if you would go in, you would go to an IRS office, you go into a conference room, they're business casual, and casual to the IRS is like sweats. I mean, I'm a little shocked sometimes at what they think is business casual. But they will come in and it's a conversation. So these days, Tina, what appeals looks like, it's a phone call. It's a phone conference where they'll say, hello, this is Mrs. Smith. I'm an appeals officer with the IRS. My ID is blah, 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 blah. You submitted your appeal. I've looked it over. Can you review for me what the issues are? And you would say, thank you, Mrs. Smith. These are the problems we had. We submitted paperwork. It appears to have been ignored, whatever it is. And it's a conversation, usually pretty low key. I've never had one that I can think of get contentious. And no, you do not have to be an attorney. It's friendlier than dealing with a revenue officer or revenue agent. This is someone who's better trained. And literally, it's a conversation. They may ask you to submit some more backup, or they may ask you about some of the stuff that you submitted, but nothing to be concerned about.
Okay, good. Next question, Eric. In a program you had yesterday, you had mentioned that the taxpayer had to have just the last 6 years of returns filed. Can you point to where you got that information?
Yeah, so yesterday we had over 800 NATP members on that lunch and learn on the inside secrets to offers. And what I did mention is to be in compliance, you have to have, so for non-filers, to be in compliance, you have to have filed at least the last 6 years. All right. So currently today, because we can't file 2021 yet, to be in compliance would be 2015 to 2020. That would be your last 6 years. So in other words, Sam, if someone came in and said, look, I haven't filed since I got back from Vietnam in 1975, do we have to file 46 years of returns? No. The last 6, 15 through 20, they're in compliance. So the person asked, and thankfully you let me know in advance, the person asked where I got that from. In the Internal Revenue Manual, in Section 1, if you go to 1.2, it's literally called service-wide policy statements. It's 5-133 is the policy statement, but the Internal Revenue Manual site is 1.2.1.6.18. And what that says, if you read it, it's 5 parts. On the 5th part said, in order for a taxpayer to be considered to be in compliance, they generally have to have filed the last 6 years. If the IRS wants to, is going to insist on more, they need to get supervisory or management approval. And when that happens is, we'll have someone come in, and what they don't tell me is they've been ducking the revenue officer for 2 years. So they'll come in and I'll say, okay, we're going to get you into compliance. So I'll call the revenue officer. Hey, Miss, Jones, it's Eric Green. I have so-and-so as a client. We're going to get 15 through 20 files. She's going to go, whoa, stop, Eric, stop. They've been ducking me for 2 years. So that's great, 15 through 20, but I want 13 and 14 too. In other words, they're not going to get the benefit of not filing those returns and paying because they were ignoring us. That can happen. So theoretically, it's the last 6 years from when the IRS started pursuing them. So if they've been ducking the government, it could be a little bit longer. But the rule is, again, it's in it's policy statement 5-133. It is the last 6 years of returns. Now, the taxpayer, just as a note, they can file more if they want to. So if someone comes in and says, I haven't filed since 2010, we can say, okay, 15 through 20 gets you into compliance. And if they say, look, I had huge losses in 14, 13, 12, do I want to file those? Well, I would, right? Those losses can carry over. Right? We may be able to wipe out a big chunk of the tax debt. So you can always file more, but at a minimum, it's the last 6 years.
Okay, that's good to know. Another question from Mary, again about yesterday. Eric, you offered a special deal to join Tax Rep Network, and you doubled the discount and gave us books. You were very generous yesterday, it sounds like. Can you clarify what the deal was?
Oh, okay. So for everyone knows, the NATP has sent this out. We arranged for a $400 discount for NATP members. What I told a lot of the folks yesterday was, because we're getting so busy, and I get emails all the time from NATP members. I'm thinking about it. What we said is that we would match the 400. So in other words, it's $800 off. And at the holidays, so first of all, we have the new book, the Inside Guide to Offers. Generally speaking, we only sell ebooks, and we give the ebooks to our members. They get the ebooks for free. Well, for the holidays, my staff wanted to bring back the hard copy books. So we ordered, I think, 200 of each. We have a handful left after we ran the Black Friday special and the year-end special. So what I said to anyone is, as long as they last, if you join up, and we gave them a very special link, which, Sam, I think I can get to you. Maybe you can post it.
You bet.
If they use that link, it reduces the price by $800. We would ship them a set of hard copy, all 4 books. And, we have those T-shirts. One is, we love tax problems. The other one is with my face, what they call Rambo, Eric. It's that picture of me with my arms crossed. Because people have been like, how do I get the shirt? I said, tell us what shirt size, and I'll send you the shirt too, as long as they last. So that was the off the cuff. My staff were horrified, but that was the off the cuff special that I offered everyone yesterday. It's the $800 off, complete set of hard copy books and the ebooks, and your choice of T-shirt.
Well, that's exciting. So if someone wants to take advantage of that, you said they can email.
Yep. Well, there's a link. There's a link that we create. I had the $800 discount we created in advance. And Sam, you know what? Let me pull that up, and can I post it in the chat in the question box?
You should be able to.
All right.
If not, we will post it right away.
All right. So let me see if I can. How do I?
There we go. Okay. Well, we've got one of our incredible people on staff. We've got a link for learning more about our partnership. So there's that.
Well, and here's the link with that special.
Oh, perfect.
So if you can somehow post that, that will automatically apply the $800. They don't need a discount code or anything else. And just so the NATP doesn't freak out, yeah, the other 400 is coming out of our end. So I'm not taking it from the NATP. Yeah, I didn't run that one by Nancy and Megan beforehand. I figured they wouldn't mind as long as it's coming out of our end. I know, listen, I have to tell you, there's so much demand right now. If you're thinking about doing it, this is the time to do it. I mean, I would jump in both feet, both feet, and maybe this will be the last tax season that you have to work. You may want to work, but you won't have to.
I love it. Moving on then. So from Rob, we've got from Rob yesterday, Eric, you are talking again about the workshop. You gave a great talk on offers, but it was 30 minutes. So Rob wants to know if he's looking for more education. You also do a workshop. When is the next 4-hour workshop?
Good question. We generally will do the workshops over the summer, but they're all recorded. So right now, if you're a tax rep member, or if you do join and take the deal, you can watch it on demand. It's in the members area. So in regards to like offers, there's 4 hours on collection, 4 hours on how to complete the 433 form, and 4 hours on just offers and strategies. So there's really 12 hours. I think I would say is on point to really roll up your sleeves and dive into. That is already in the members area. You don't have to buy it separate. It's part of the membership. As far as the live workshops where we give CPE, those will take place generally during the summer. So starting in May, we're not going to do it during tax season. So starting in May, June, July, August, we usually run the workshop series.
Wonderful. So keep a lookout for that, Rob, and anyone else interested, of course. So then we've got our next question from Boltar. If I only need to include the last 6 years in an offer, which we talked about earlier, if my client, and we kind of referenced this. So if my client owes 2013, 2015 through 2020, which years do I include, and can I ignore 2013?
Okay, well, two different things. So first of all, the 6-year rule is for compliance, meaning that you have to be in compliance in order to do an offer. All right, that is much different than what you include in the offer. When the government, and I get this every now and then, people will come to our office and say, look, Eric, I owe 2010 to 20. So here's what I want to do. I want to compromise 10 to 15. And then I want to get into a payment plan. The government doesn't do that. Whatever you do, it's all encompassing. So as long as the client, was it Boltar?
Yes.
All right, Boltar is assuming that you have the last 6 years filed, so the client is in compliance. Then the question is, what do you include in the offer? Every open year, because the IRS, to compromise, it's everything across the board. They don't do it piecemeal. So you would include 13, it was 13, and then 15 through 20 every year. If they also owed for 09 and 10, because that was still outstanding for some reason, you would include everything in the offer and get it all settled at the same time.
Got it. 2 more questions for you. So hang tight, all of our viewers and listeners. We had quite a few this week, which is really exciting. We love to see that. So Eric and this one is from Jane. Eric and Roger Nemeth. We love Roger. You guys gave a great conference in Las Vegas. When will you be doing training together with NATP?
Honestly, probably now. Well, not now, but after tax season. So that's a good point. I will reach out to Nancy. I'll reach out to the NATP staff, and we will figure out coordinating Roger's CSED stuff and all the stuff he does on transcripts combined with the collection stuff that I do. Let me coordinate with that with the staff. But yeah, given that we're both teaching for NATP, there's no reason why we can't, coordinate and do some stuff together.
Perfect. We look forward to that. Last question, and this one is related to representation, but not maybe directly. So this person wrote in, winding down a cash basis LLC taxed as S-P. Can you explain what that is quickly?
A sole proprietor.
Okay.
So it's a pass through. Okay.
Thank you. Beginning in January 2022, business will no longer offer any services and there will not be any income. Is it possible to include the various expenses that will be incurred January to February 2022 on a 2021 return, or will it require another return for 2022 that only reflects the expenses?
Okay. So I'm going to give you the technical answer, and then I'm going to let's be honest about what's probably going to happen. So the technical answer is, any auditor that came in, they're going to look at the timing of this, and 2022 expenses have to be deducted in 2022. You can't just shove them into 2021, technically, right? And the reason being is, you'd say to the government, well, it's 6 or half dozen, does it matter? Well, it does, because you're understating your 2021 income. And so from an interest timing of income, it does impact the government negatively. Here's the reality. If we're talking a few $100s of expenses, I know a lot of EAs and CPAs that would put it on 2021 because it's just not worth fighting. The government's not going to fight about it. It's not going to get audited, and rather than doing a whole 2022 return next year. If those expenses, though, are beyond something de minimis and are significant, and a wind down, it could be, right? Final things being paid and whatever. The technical answer and what I would suggest is, unfortunately, you're going to have to file a 2022 return next year. So you're going to have one more year of doing returns. So from a technical timing, you got to take the expenses when they were incurred. If it's something that's, like I said, really de minimis, I know plenty of people that would shove it onto the 2021. Technically, I'm not advising that, because that would be I don't know if it's unethical, but it's not the technical rule. So I guess I should stick to the technical rule. Technical rule is you have to deduct it the year that it was actually incurred, which would be 2022, which means you're doing a return next year.
Got it. Of course, each taxpayer's situation is different, and really, really consult with them and with the tax preparer themselves. We have to say that, but that is great. That is great information, Eric. It looks like we are wrapping up, unless I didn't see any questions come through on the chat. Is there anything else you want to add, Eric, or discuss?
No, other than we'll be back next month, but yes. I wish everyone good luck in getting through tax season, and don't. I think we talked about this last month, and I know I've talked about it on the podcast. You don't need to work with people you don't want to work with. Feel free to fire your D and your F clients, all right? And make sure you up everybody else's fees, right? Everything goes up. The software goes up, the rent goes up, or whatever. Your staff want a raise. Hell, you might want a raise. So it's your business. Take control of it. And because tax season is always tough, I don't think this tax season is going to be very easy between the child credits and everything else. Don't feel like you have to work with someone if you don't want to. Okay. Listen, good luck with tax season. We'll be talking again anyway. Like I said, Sam and I will be back next month, I think, doing this.
Yep.
Yes. And if you have other questions outside of this, feel free to send them. Sam will forward them along to me. Meanwhile, if you're interested, check out that link. We'd love to have you join Tax Rep and start building a whole new revenue stream.
Indeed. Well, thank you everyone for joining us. And we, like Eric said, we'll be back again next month. Eric, have a wonderful rest of the day. Stay safe, and I will see you soon. Thanks. Bye.
Great.